today we're going to be giving you a behind the scenes look at our newest acquisition, Reserve at Rosemont in Georgetown, South Carolina. It's between Myrtle Beach and Charleston. It's 66 units, and we're really excited to go through it with you and give you the high level details of the property and of the acquisition as well. John, it's great to be here with you.
Oh man, what a good day, Mark. When we're talking about a new deal we're launching, we've mentioned on the podcast before, but it typically takes us 300 properties to identify one that meets our stringent underwriting criteria. Getting an opportunity to get on site a few weeks ago and walk this asset with our team and our construction manager, just couldn't be more excited for this deal. It's not often you find a deal in a market with no new supply, good demand drivers, and an incredible location, right? It just checks all those boxes, and we'll kind of get more into this, but the low basis, that $100,000 a unit is just like exceptional. It's almost like unheard of. So really, really a great opportunity that I'm looking to dive into more today.
Yeah. And John, so for the real estate investors out there that know the 1% rule, which is pretty much you get 1% of the value of the property is what you're getting every month in rent. So if you can do a 1% rule, it's pretty good. Well, in this case, when we do our renovations, it's actually like 1.5%. So, which is incredible when it comes down to it. Now, John, this asset generally, it is a little bit smaller than what we would normally go after, because generally we'd be going after the 100 units and above. But in this case here, the deal was so strong that we're like, you know what, we definitely need to take advantage of this to ensure that our investors get access to a deal that, we'll just say, you said it, 1 in 300 is what it was. So we're going to be diving into the opportunity, how we found it, and then we'll actually walk through as well about how the whole offer process went. We'll dive into that side of things as well.
That's right. So, as you mentioned there at the top, 66 units. This property was built in 1971. Now, generally, we like 80s or newer. But after touring the property with our construction manager, we realized all the major mechanicals have been updated. There is a little bit of cast iron piping that we will be replacing. The current owner has replaced the majority of it. There's a little bit left over. So once we update that and replace the roofs, this building will be effectively new. It's brick construction, so the framing, the building itself is solid. And this location, Mark, it's really sort of a hidden gem, right? It's in Georgetown, South Carolina. It sits about an hour outside of Charleston and about 30 to 45 minutes south of Myrtle Beach. So people are commuting to commuting to those markets to work from Georgetown. And it's also a hotspot for retirees that are looking for a really great, place to live with a more affordable price tag. Charleston has become quite expensive, right? And so it's got all that charm of Charleston. In fact, it's the third oldest city in South Carolina. When we were in town, we always explored the entire market, but we had a great opportunity to spend a little time in downtown Georgetown and grab some lunch and walk around. And man, gosh, it was so vibrant. There were people everywhere out eating at the restaurants and shopping at the shops. It's right on the water. It was just absolutely gorgeous. In fact, I'm already thinking about scheduling in a weekend trip up there to take advantage of the farmers markets and all the kind of cool community events they do in the area. This is an exceptional deal, Mark. It's not often you find a deal that has the potential for $400 plus in rent lift for the renovation program we do. So really, really excited for this one, and excited to dive in today and discuss it further.
So John, what was that? We went to this lunch spot when we were there. So there's like 10,000 population. So it's one of those towns that was, it's almost like you in some of these movies where you see kind of that hometown hero area. And so there's like 10,000 people there. And we went to this restaurant. What was the name of that restaurant we went to?
The whole time you were talking about it, I was trying to recall. I know it was something cafe, but the first name escapes me, but it was fantastic.
We'll need to share it because we went in there and I had this amazing club sandwich, and it was just like, beautiful. The service was excellent. They treated us really well. And, you knew it was kind of the local hangout. We'll have to put that in the show notes as well, John, and make sure that people's like, I want to go. I'm going to go check it out. I'm going to check the apartment. I'm going to go stop in. Yeah. But it was when we were sitting there, I'm just like, I feel like I'm in a movie right now. Like, this is like the streets are all manicured. It's right there on the water. And, you have like the old trees there, and you could tell it's like it's a very safe community as well. But I mean, I want to go back just to go have another sandwich at that at that location.
That's right. Yeah, the fresh seafood and everything.
Yeah.
But no, you're right. I mean, it literally felt like you were walking through, sort of like quote unquote small town America. I mean, it was like if somebody said, take a picture of what a small town American town looks like, that's exactly what I would envision. And there was like a community theater and, music stores and just, art stores. So, just one of these places that, retirees are flocking to. The median home value in that market is about $258,000. And so, that is affordable for a lot of folks, but it is becoming more of a challenge for that working class person, right? Because yeah, you've got the home value, but then you've also got to factor in those higher interest rates and the higher insurance costs. So 35% of the population in Georgetown rents. And what's amazing, and I would say this, that the challenge for people in Georgetown, but what makes this an amazing opportunity is that there have been no new developments in the past 2 years. There was one that was delivered in 2022. We had an opportunity to tour it. It's a great building, has great units with great features, but Mark, it's 3 stories, right? And so I'm kind of thinking about the demographics in that market, and I'm looking at our property, Faris Residences Georgetown. And the thing that really came to mind was all of ours are street entry into the unit. Mm-hmm. So just very convenient for really anybody, right? I mean, if you're a mom and you're coming home with the kids and you got your groceries, you don't really want to hike up 3 flights of steps. But if you are a retiree and you're, looking for a place to stay for a number of years, you might be thinking ahead and saying, geez, like, am I going to be able to get up these 3 flights of steps in 5 or 7 years or whatever? And so the convenience that affords and the way it's sort of tucked back, it's right in the center of everything. You're about a couple minutes to downtown, right down the street there, less than a minute away is all the retail corridor with the grocery stores and, all your kind of convenient stores and shops, but it's tucked back. So it just feels like you're in the middle of the woods in a sense, and very private and very quiet community, which I also observe. So this is, really an exciting deal that I think our investors are going to be really, fighting to get a piece of. So I'm looking forward to launching here and, seeing how it goes.
Yeah, for sure. And you had mentioned it as the age of the building. So it's built at 70s vintage. So generally we would be buying 80s or newer. But in this case, what's really interesting is that the cost basis per unit is $100,000. And so the other thing is there's over $400 lift just in rent lift. There's then on top of that, you have operational expenses that we can cut as well, which is around $100. And then we have on top of that, we have some additional services we're going to be adding as well, which actually adds on top of that as well. Now, so there's just a huge amount of upside. And John, what I love about this, and you and I both know, when we go and we see an offering memorandum, we see like, for those that aren't sure what that's like a glorified feature sheet that a broker would send out to potential buyers. When we see that, and there are, we'll say 75% classic units, I'm excited. In this case, it's 100%. All of them are classic, as in they all have upside, large amount of upside that we can go in and renovate these units and spend like $15,000 a unit. And we can go in and we can bring them up to a very high standard. And so the beauty of this too, John, is that, with our other assets in Charleston, we already have everything all laid out in regards to, the materials, the cost basis. We even have, our GC, like he knows the lay of the land really well, and it's just rinse and repeat. And so that's where for us, when we see that kind of upside, we're like, you know what? Yes, it's 70s. And, we did, from a due diligence standpoint of what it actually needs and having extra reserves in there as well. It's just too good of an opportunity to say, no, we're not doing that just for the sake of, we're not buying anything in the 70s. If you buy something at the right cost basis and you back yourself up with proper amount of reserves to make sure that anything that can come up is covered, it's sets a very strong stage to have a very strong exit in that kind of 3 to 5 year time frame.
That's right. The high barrier of entry into the market is something that we thought a lot about as well. As I mentioned, no new supply in 2 years. This particular market, it's a little more challenging to get new deals like new multifamily approved. So we like that. There are only 946 units in the market today in multifamily style buildings. So as I mentioned, 30+% of the population rents. There's 10,000 people in the population. So that means people are having to find, homes, or they're having to go further out and maybe get away from where they would really like to be. So providing quality rentals in this market is something that is absolutely lacking. We'll be able to take advantage of that. And so our renovated units will really give us a competitive edge. Because it was built a little bit, back in the 70s, we often see this in the 80s as well, as the unit sizes are actually a little bit larger than what you're seeing with new development. So they're very generous floor plans. There's actually some townhome options within the community as well. So for somebody looking for, a little bit more privacy or a larger unit, we're able to offer that, but it's still street level entry, which I think is just something that is very attractive for potential renters. So that high barrier of entry into a supply constrained market is one of the key reasons we love this deal. We talked about the retirees and that workforce renter demographic. 22% of the population in Georgetown is 65 plus. And when we were downtown, we're walking around, we saw that, we felt that. A lot of the folks at the cafe we ate at, were in that kind of cohort. And, these are people that have worked their life to accrue, an income and a savings to allow them to retire. And they want something nice and quality, right? But they don't want it to break the bank. They're on a fixed income. So being able to come in and deliver a high quality unit at a still very affordable rent, I think is something this market is just going to really love. And, the market is smaller. There are some, great employers within the market, but the majority of the population, the workforce population, is commuting to work. So they're driving back into Charleston, or they're driving up to Myrtle Beach area, but they're staying in Georgetown for the lifestyle and just the quiet nature of the market. So we will have a large, demand for these units. And on top of that, the population mark is projected to grow 5% over the next 5 years in a 3-mile radius just around our building. So I'm not even talking about Georgetown. I'm just talking about in a 3-mile radius around our building. So when you put all those factors together, it's just an incredible opportunity.
Yeah, for sure. And so from a budgeting standpoint, we made sure that we had adequate cash reserves to make sure that whenever we take we'll say acquisition of a property, we take it over, we want to make sure we have this 28-day transformation that we go in and we do a full revamp of the exterior. So landscaping. Now, in this case, John, it may actually go a little over the 28 days, because on the exterior, we're looking to do some work there, a little bit more work than we have in previous. We have the budget for that, which actually leads me to the opportunity where the transformation of this property, John, is probably one of the biggest things that we've talked about. Seeing what we've done in our prior properties, but seeing this from before and after is something that I'm really excited for, because this is going to be a very stark contrast from, okay, here's before, and then this is after Faris got their hands on that. And again, our take whenever we go into a new asset, we give first to the community before we go in and we start increasing to market rent. Because in this case here, John, this asset has very much been, just fill it with occupancy, and we're not going to bring it to market rent. And so for us, our take is give first to the community, add value first, and then you can substantiate why, the rents are coming up to market value.
That's right. And when we're on site doing these tours, Mark, we always try to talk to as many residents as possible. We toured some units that were occupied, so we spoke to those residents. We talked to a few people that we met out in the parking lot, walking to their car. And the consistent theme was they wish that there were more community, sort of meeting spaces, right? Because at this point, there's really not any amenities on the property. So there are 2 laundry facilities on site that we're actually going to convert into storage. The reason we're doing that is we have the ability to put washer and dryer hookups in the majority of, or pretty much all of these units. There's already some installed, but we'll finish that out. So they'll have in-unit washer and dryers, which is a massive, massive upgrade. In fact, Mark, if you look at surveys of residents, these are like nationwide surveys, the number one thing people look for is in-unit washer and dryer. And, a lot of people, when you say that, they're like, well, don't all apartments have that? You'd be surprised. Many don't. And so putting that in will be an immediate value value to our residents. But those outdoor meeting spaces, there's a kind of a piece of property. It's on the, of course, it's a property we own, but it's being underutilized. It's behind these buildings. They have a storage shed back there, but it's a huge open green space. So we'll place a playground back there as well as a dog park. We're going to put in a pergola and some grilling stations. At those grilling stations, we always include some games like cornhole and some other things like that. Put up some doggy, kind of whatever. It's hard to talk about it, but kind of the poop stations, I guess I'll just say, throughout the property, just to keep it tight and clean.
You got it right. That's how you'd say it. That's how I'd say it. Yeah.
Trying to avoid it, but it's like, I don't know.
You got to keep this like G-rated here.
But all that to say, landscaping, right? And then, gosh, that exterior, it's brick and it is nice, but there's just opportunity. So replacing the roofs will be an immediate lift. We're talking about changing out some columns that just look a little dated to something a little more modern. We'll be pressure washing and painting where appropriate. And, gosh, when I think about Largo and I think about like Strawberry Station and some of the others that we did that big exterior lift on, and, to your point, I'm already like anxious to see that result, in like 3 to 6 months once we close this deal and get that work done. New signage, right? New outdoor lighting. So replacing all the light fixtures. So it's going to be a big project, but it's going to be amazing. And the residents that are there, Mark, we met 2 that were there for over 5 years, and they absolutely love the community, but they wanted the meeting, areas. They wanted more community features, and they wanted renovated units. So we know the appetite is big there for what we're going to be providing. So always exciting when you can find that. And, interestingly enough, Mark, generally we kind of like it when the property is poorly managed because we know that's an easy fix. We can come in, put in our, Faris capital, our Faris Residences touch with our guarantees and our mission and values and just bringing in a new PM team. In this particular case, it's actually quite well reviewed. It's got 4.8 out of 5 on Google. So, we do like that as well because it means we're not going to have to come in and like re-earn the residents' trust. We just have to come in and add that additional value, and we'll be able to pick up where the other operator left off. So, I think to me, that's something that in this case, I'm actually excited for. But of course, we'll be bringing in a proven national property management company that just has a little bit more technology and tools and acumen. So things like 24-hour tours, the ability for residents to submit maintenance requests online, and just sort of a little bit more of a modern approach. So we will absolutely be doing a lot to change the management, but it's well-loved property. So we do like that in this case. So once that transformation occurs, I have no doubt our residents will be really happy and excited for what we're doing there.
Mm-hmm. Yeah, right on. So before we get into, we'll go over some high-level returns on this, John, but let's talk a little bit about how the deal went down. I think, if I'm listening, I'd be curious. How'd you get the deal? What was that? So why don't we start kind of at the beginning? So we had the offering memorandum, the deal sent through to us, and let's maybe talk through a little bit about how and the steps that we did in order to get to where we are today, where we just had it go under LOI, so the letter of intent was accepted, and so now we're into drafting the agreement of purchase and sale. So by the time this actually airs, we'll have that all wrapped up. But John, how did we get to this point?
Yeah, so really strong broker relationships were a key factor here. So the broker on this deal is the same broker team. So it's not the literal same broker, but he's on the same team as the broker that we closed our Charleston portfolio with. So, when it comes down to selecting an offer, that kind of track record and history with the broker makes a big, big difference. And so the main factor, though, is that we actually got this deal a little bit early. So we were able to take a peek at it before it hit the market. Because of the location and the proximity to Charleston, we actually sent our construction manager up there first. He was in market. It was easy for him just to cut out for an hour drive up there and take that tour. And because it was 70s vintage, we knew that we were going to be really thoughtful about, is this, the right kind of 70s vintage for us? And that looks like, really strong construction and a lack of any of the problematic building materials you sometimes see in the 70s. So he confirmed the property was in great condition and did not have, outside of the cast iron, which once again, mostly has been replaced, we'll finish that up, was in place. So that gave us confidence to schedule in that full tour. Now, we get a lot of deals. I mean, on a daily basis, sometimes we get 10 to 12. And so, you're underwriting all these deals along the way. So what I started doing, Mark, is really diving into that market because it's, outside of Charleston in a way where you really can't say it's Charleston. So we had to really understand the marketplace. So we did a ton of research, leveraging, census data from CoStar, looking at Zillow, Realtor.com. One of the things we're always mindful of, Mark, and, just this is really for the benefit of the listener is, what is the median home value and the average home value? And is renting still a more affordable option than owning, right? So, for example, Greenville, South Carolina is a market where it's not the whole market, but we've looked at some deals there we get excited about, and then we realize, well, geez, the person can just go get an FHA, mortgage and basically have the same mortgage payment as rent payment. So we walked away from that deal. So in this case, that median home value is still such that owning will be a lot more expensive than renting. And so that's one of the key metrics. And then once we really saw how the population was growing, there was this retiree influx happening, there was workforce people coming in from Charleston and Myrtle Beach looking for a more affordable option, we got comfortable with the market. So we booked in that time to tour. Now, along that whole process, our acquisitions director, Joe Lowry, is interrogating the deal in our underwriting model. So, we really stress test every element of the deal. Like if something were to happen, if an employer left, or if, there was some sort of black swan event and our occupancy dipped. But because of that low basis, Mark, our debt to, mortgage, ratio is so strong that it's like, the break-even occupancy is just, amazing. So all those factors, all those boxes got checked. So we scheduled in the trip. We probably spent 2 hours on site, a few more hours touring all the rent comps, touring the market. So we spent the full day in Georgetown. And once we got back home, we realized it was a deal to pursue. So we put our LOI together, which ties back to the strong broker relationship because it was interesting, Mark. This was some feedback we got from the broker here that there was another offer that was a little bit better than ours, but they have had experience with that particular group and they were very difficult to work with because we closed this other deal with that same brokerage shop and were very easy to work with. Now, look, when I say easy to work with, we're looking out for our interests and our investors' interests. So it's not like we just lay down and, take whatever they give us. But it's really about communication, doing what you say you're going to do, honoring your commitments, and doing whatever it takes to close on time and ensure that you close, right? One thing you see in this market really I say this market really in this business would be a better way to say it, is that concept of retrading where some groups will come in with a really high offer and then their intention is in the due diligence process, they'll beat the seller up and lower the price. We commit not to do that unless something that nobody could have anticipated is discovered during due diligence. So if it was an unknown defect or something that we uncover, we're going to address that. But we're not just going to come in and try to slam, $200,000 off the purchase price because we feel that, the seller's in a situation where they'd rather close, right? It's just not, we wouldn't want to be treated that way. We don't want to, do that to others. And so that gave us that edge. So we actually won this deal even though we weren't the highest offer. So that ties back to that strong broker relationship. So that catches us up today where we're getting the deal approved and ready to launch to our investors.
Yeah. And so I think that's such a valid point is that when we go in with our offer, because these deals are so rare that we factor in anything that can go wrong, we factor that into our model. We factor that into our offering price. And so it's a strategic decision that we go in and we say, hey, listen, here's our offer. There won't be any retrading because we've already factored everything in. That goes a long way. And in this case, there's actually, I was speaking with the broker, there was two of them that were higher, two different operators that were higher than us, and by substantial amount too. We're not talking we're talking about quite a bit. And so this to me is a very powerful thing. Whenever you're going and buying assets, you want to make sure that you're a straight shooter with it because at the end of the day, if you could win in the short term by being, I'm going to go back and retrade you $1 million because, there's overgrown trees, but the reality is, are you ever going to get a deal again for all of your investors? Probably not, because you got to realize a lot of these offers, there's like 15 to 60 offers coming in, even in a slower market like today. even when properties are selling at 20 to 30% discounts. And so the reality is there's such an appetite for these assets that you got to think long term. How can you get the best deals, but to build relationships where you get steady deal flow on an ongoing basis? And I see it, with Faris team and, and where your previous business is, that the relationships that you build long term, that's where you win.
100%.
We always saw that when we're negotiating with other agents, we want to be able to make a win-win deal. If we go and try and shortchange somebody, you might win in that deal, but in the long run, you're gonna lose in the long run there. So in this case, taking those steps ahead of time, being straight shooter with the brokers really allowed us to get it for the best price, to get the deal, and moving forward to really cement that relationship. So future off-market deals will be the first on their list.
That's right. I think any entrepreneur listening to this can relate, but what, in my experience, over a period of time, every industry gets really small, and by that I mean you start to know who all the players are, right? And there's that ability where it's like everybody kind of knows what everybody else is up to. So in the commercial real estate world, for example, this particular broker is with Berkadia. Well, Berkadia has a call every Monday where every multifamily broker is on in the entire nation. And they talk about deals. They talk about successful deals. They talk about deals that went sideways. And so if you retrade or you treat a broker poorly or, don't close or whatever the circumstances, every broker in Berkadia is going to know about that on that next Monday morning phone call. And we found that that's very common amongst most of the larger national commercial real estate shops. And then they talk amongst themselves, even from different brokerages, right? Because if you look at Charleston, for example, there's just a handful of commercial real estate brokers doing these bigger deals. Now, some come in from Charlotte or Raleigh or different areas of the Carolinas, but the ones that are there, and so they all know each other. When I talk to a broker, it's not uncommon for oh, do you know so-and-so at CBRE? You should talk to them. They're awesome. So it's a very small business in that way. And so your reputation is critical. And so we always tell brokers, look, we close 100% of the deals we put under contract, and will be as easy as possible to work with our communication. And so it's starting to pay off. Here we go, another opportunity that came to us because we did a great job on this other one. So it's so critical, Mark. I mean, any operator who's listening to this that thinks that it's all about like treating it like a zero-sum game, like only one person can win, everybody else has to lose, you will lose in the end. You might win this deal, but trust me, in 5 years you'll look around and go, why won't anybody do a deal with me? Well, because you treat people like garbage, garbage in, garbage out, right? And so I think that it's what really gave us an edge here, will continue to give us an edge in the future.
Right on. So yeah, John, you had mentioned earlier about the break-even occupancy. And so, I mean, we're looking at mid 60%. So you could have on this particular deal, you could have pretty much 35% of your tenants vacate and the property will still carry itself.
Yes.
That's how strong these deals are. So when we're buying them, in this case here, I think this asset's we're 97%. John?
97% occupied today. Yeah, that's
97%. And so the reality there is there's a lot of buffer there. There's a lot of buffer there where it's safety. And so we really like that this property is actually that break-even occupancy. That's something that we really look at. It's a safety measure that whenever we go in on an asset, that's why we love existing buildings versus new, because, if you get your new, say the contractor gets up and walks out, you got to feed that thing. And that thing eats 3 meals a day, right? When you're building, when you have no income coming in. And so assets, value add assets that are cash flowing from day one is where we really love to buy in. And so this case is no different. So John, let's just quickly go over the high level returns, how this works. We're currently on this particular deal, we're looking at that 20% average annual return is what we're projecting. We're looking at that 6% cash on cash returns. And then on this one, John, we're actually looking to introduce a Class A and Class B. So, we have our Class A shares at looking at a 10% cash on cash return. So there'll be no participation on the upside. The cool thing about this is that if you like cash flow, this is for you, where on monthly basis, you're getting your distributions like clockwork. And then you have that Class B share where you are getting that participation of the upside, but you're also getting cash flow, a lower amount on average, about 6. So it starts at around 5 and then it scales up to around 7, 8, but it averages out around 6. And so you got participation on the upside as an option, and cash flow as say the Class B shares, and then your Class A shares has cash flow. And so those Class B shares, the way that the returns work is you have an 8% preferred return, so you get that first 8%. And that would apply to the Class A shares would be the 10%, and then you have the Class B at 8% preferred return. And then anything over 8%, it's a 70-30 split. So there's a waterfall there. So the 70% goes to the investors, 30% to Faris Capital. And then only after 15% IRR or internal rate of return does it go to a 50-50. And so both classes have huge advantages. One, you get huge amount of cash flow, 10%. Like, it's hard to find another investment where you're getting ongoing 10% distributions. And then the other side, you get cash flow and you get all the participation on the upside as well with that 8% preferred return. So the way we structure this, John, is in a way that will help our investors win big, hold Faris Capital accountable, and still give us an incentive to say, hey, listen, if we really hit this out of the park, we'll be able to participate in 50% of that upside once we get you or our investors at 15% internal rate of return.
Yeah, it's amazing to have those options. A lot of our investors have shared with us that they like the idea of just the consistent, moderate cash flow returns, so that 10%. So we're excited to have that offering available, and you sit right behind the lender, right? So it's a great position to be in. So all that to say, this deal will fill fast, Mark. I mean, we've barely teased it out just to kind of some past investors, and based on soft commits, we're almost already full. So if you're listening to this and you're interested, you need to act fast. There's a link below in the show notes. Click on that. You can put your name in the hat, so to speak. We'll give you a call. We'll schedule in a time to talk, and we will walk you through the details of the deal in greater detail, and you can make that decision. But this one will go fast, no doubt about it.
Yeah, 100%. So in this case, we're going to actually put the link below to check it out. Once it's filled, we will. There's only a certain amount of seats in this or spots available in this particular deal. We will be posting once it's filled, fulloutinvesting.com, which is going to be talking a little bit more about how our investments work, and we'll actually have a sample deal in there as well. And moving forward, guys, if you really like the show, you can go ahead and share and subscribe to the channel. And moving forward, just we love you guys, and keep thinking and investing big.